Good afternoon, dear members. It's 2 past, and in the interest of time, I suggest we start. Welcome to this third webinar on auditing the self-regulation. Today, we are very lucky to have with us Dimitri from PwC. I will show you the agenda for today's session. So I think there is a big overlap with the last session of last week, so we'll just go quickly again and give you an overview of the Green Finance Regulation, the overview of the audit-related changes, and then I'll give the floor to Dimitri, which will provide you today with a deep dive into the audit program that has been published today. Then we will follow up with a couple of Q&A, and I will give you an overview on the next steps. So Dimitri, welcome on board. Looking forward to hearing more from you when we go to the deep dive into the audit program. A very quick overview. Green finance, you know the slides. This is just to give you an overview. So on the first slide, there is not much that changed since we last spoke. You all know about the FINMA circular on nature financial risks, which is in force and which will apply into force in stages from January next year. On the self-regulation, I think the whole series of those webinars are dedicated to the self-regulation. There is one more next week, and you will be able to register at the very end of this webinar. Swiss climate scores in force, implementation optional, and we are also giving the members guidance to implement the Swiss climate scores. This slide is more interesting and gives you an overview of the last consultations we did last year or this year. On the 3 pillars, you all remember that the Federal Council decided that there was going to be a Marshall at the end of March. So more to come in that regard in the next months. That's to give you just an overview of the regulation Green Finance. Now we switch to the overview of the audit-related changes pertaining to Self-Regulation 2.1. I think you all remember the 9 gaps that were identified by the Federal Council and by the TIF last year. What allowed us to continue with the mere self-regulation, and that means without any state regulation, and was filling these gaps. Today, we fill the gaps 8 and 9, and rest assured that the idea is not to change the rules mid-game, but the self-regulation will continue to evolve. We believe that self-regulation 2.1 is indeed a stronger version. It will further improve. We know we have to clarify the situation regarding ESG integration and exclusion. There will be also new Bausteine, both for the real estate funds and for the securities funds. But today, the focus is the audit, and we're convinced that with the audit, we have a cornerstone of the whole self-regulation concept. And with this missing piece, we close all the gaps on the industry side. You will see in the new self-regulation 2.1 that has been published last week on our website that Article 30 bis is now brand new. And I think everyone is happy with the new wording of Article 30 bis. We will touch more upon that later, but just to give you a hint for those who were not with us last week, we have now an audit program which has been published today on our website, and more on that in a couple of minutes with Dimitri. We designed all the audit program together with ExpertSuisse, with the working group that is led by Dimitri. And obviously, the audit report on the findings and the result of the audit to the body responsible for the governance of the institution. But more on that in a couple of minutes. So that's just to give you a very brief overview, but now I think that we can deep dive in today's main focus, and that is the audit program that was published at the end of this morning on our website. Dimitri, once again, thanks for all the hard work, and thanks for being with us to deep dive in this program. The floor is yours.
Thank you, Guillaume, and this is my pleasure to be on this webinar together with you. As Guillaume mentioned, I had the privilege to chair the working group of ExpertSuisse, which is the Association of Auditors in Switzerland. that has designed, together with the AMAS working group, the audit program for the audit of the Sustainable Self-Regulation 2.0 or 2.01 now. So the working group was composed of representatives of all major audit firms in Switzerland, including PwC in my person. And at this moment, I would like also to express my sincere gratitude to the whole working group for their very valuable contribution, hard work on this audit program. So now let us delve more into details. So first of all, the audit of compliance with the self-regulation is designed to be a limited assurance engagement. So those of you in the audience who are auditors will know that there are two levels of assurance in general. There is a reasonable assurance, which is where the conclusion is worded in terms of a positive assurance, basically confirming the subject matter in a positive manner in all material respects. And there is a limited assurance where the conclusion is worded in the kind of a negative assurance, where the auditor states that nothing has come to the attention of the auditor that would cause the auditor to believe that the subject matter, so in our case, compliance with the self-regulation, is not correct in all material respects. And limited assurance engagement provides for a lesser level of testing and detail. And we've chosen this approach, first of all, because limited assurance is at the moment the mostly used form of assurance for all sustainability related audits in the market. And also secondly, we also needed to balance obviously the efforts, the costs with the benefits of the audit. And limited assurance engagement is expected to be performed in accordance with the International Standard on Assurance Engagement 3000, which governs all assurance engagements which are not audits or reviews of financial information. And this standard allows the auditor to apply a risk-based approach in terms of identifying the areas of high risk, focusing the audit procedures on those areas. Also, it allows to place certain reliance on internal controls at the organization, and also obviously also allows to do substantive testing based on a sample basis. The audit program does not provide specific guidance, for example, on the sample selection approach. We expect that every audit company will have their own policy in relation to sampling for substantive testing and will apply that policy consistently. And also those of you who are the auditors in the audience, they will also know that the IC 3000 standard also differentiates between a so-called direct subject matter assurance and an attestation engagement. So this audit is recommended to be designed as an attestation engagement, which means it will be based on the management assertions that will elaborate how the entity complies with the self-regulation, and those assertions will be summarized in a separate management statement that will be attached to the assurance report issued by the auditor. In terms of the frequency of the audit, the expectations that it will be performed on an annual basis, and the period of the initial audit may vary. So as you already know, the self-regulation says that the audit requirement begins after the 31st of March 2026, so basically from April 2026. And we have provided for a flexibility, and here I'm already citing one of the frequently asked questions that is to be published very soon. But that FAQ will say that for the initial audit, the organizations can vary the initial audit period in order to align to their regular reporting period or regular audit period. And that period can be from 6 months to 15 months maximum. And once that initial audit has been completed, then the expectation is that the regular recurring audit will be on an annual basis. And it's also allowed, obviously, to undergo the audit retrospectively if organizations wish to do so. But at the minimum, the audit period starts from April 2026. At the institution level, the audit will obviously be performed on an annual basis, and here we are allowed to apply a risk-based approach. So the audit procedures at the institution level, and I will elaborate on those in a minute. There, obviously, the auditor can identify key risk areas where there were maybe exceptions or deficiencies, and apply more testing there, and less testing for less risk-prone areas. At the product level, where there will be also separate audit procedures, the idea is that for the initial first-time audit, all sustainable products that are classified as sustainable in terms of the self-regulation will be captured in that first-time audit. For the subsequent recurring audits, the idea is that only products with significant changes need to be specifically covered by the audit. Significant changes means, for example, changes of sustainable investment objectives of a product, or changes in the sustainable investment approach of a product. It can also be obviously a material change in the specific KPIs and metrics that have been designed for that product, and that would need an additional attention of the auditor. So here, the organization and the auditor will need to agree on which products will be subject to the audit for the recurring audits on an ongoing basis. So you may ask you to change the slide, please. Yeah, thank you. So in terms of the assurance procedures and the structure, so you will see that the assurance procedures have been structured in order to capture all relevant provisions and articles of the self-regulation. And if you view the self-regulation as a kind of a matrix, as depicted on this slide, so we have the requirements for asset managers, and then we also have the requirements for producers of collective investment schemes. And then we can also break down the requirements at the level of institution and at the level of the product. So basically, the audit procedure is structured exactly in the same manner. We have separate procedures for asset managers and separate procedures for producers, grouped by institution and product level, but they are presented alongside of each other. So that, first of all, there is an easier comparability. Then the auditors will immediately see what is the procedure for the asset manager, what is the similar procedure for the producer, because often, obviously, asset managers and producers can be the same entity. And here we wanted to provide the option to leverage those procedures between the asset manager and producer. And this visual presentation of those procedures, in our view, has actually increased that transparency and comparability. We had a discussion in the working group about structuring the procedures rather at a high level or more detailed. And we've decided to go for a more detailed procedure, really to clearly delineate what should be performed for each specific provision of the self-regulation. First of all, we wanted this audit program to be really a useful practical guidance for the auditors, but also for the organizations when they prepare for the audit, and not just a very high level. And we also wanted to ensure that there is a level playing field and there is a comparability of the audit approach among various audit firms. And we believe that this rather detailed structure actually provides with a good basis for that comparability of the future audits. So now let us have a more deep dive into the individual audit procedures, and let me start with the institution level. So the first area here is the governance and organization. So obviously the auditor will need to assess the appropriateness of the organization internally. So organization means the composition of internal committees, but not only the committees, also obviously the adequacy of the infrastructure used at the asset manager. It could also be technical infrastructure, IT infrastructure, and so this needs to be assessed. Also, in terms of the wording, we use the word assess throughout the whole audit program. as a kind of an overarching term, but obviously when specific, more detailed procedures are designed by the auditor, the auditor can obviously use also the specific audit procedures that are known in the audit profession. So they can obviously use inquiries of the management, they can use observations, they can use inspections of specific documents. They can also obviously provide carry out walkthrough meetings with the owners of specific processes, and they can also apply specific substantive testing. So there, we did not want to be very specific at that level of detail, and we believe that regulated audit firms will have their own policies and procedures that will actually enable them to design those procedures in more detail. So yes, as I said, the test manager, we need to assess appropriateness of the infrastructure and organization, and also obviously the level of knowledge of the involved personnel. So first of all, the operational staff members that are involved in the sustainability space, but also the knowledge of the governance body or committee members. And that evaluation is expected to be performed by means of reviewing the CVs of those individuals, but also inspecting evidence of specific sustainability related training that has been provided to those individuals. At the level of the producer, the procedures are very similar. So here there is also an assessment that the governance bodies and their employees have adequate relevant technical knowledge. And here we also have a specific procedure. So if the producer does not manage the specific product by themselves, but this is a third-party asset manager, then the producer needs to have a process in place that ensures that asset manager complies with the sustainability knowledge requirements. And the producer will need to obtain a confirmation from the asset manager on that. So the auditor will need to review the evidence of that confirmation. Next slide, please. Further, at the institution level, another important area is the internal processes and controls. So here, the auditor at the asset manager is expected to assess the formal documentation of the underlying processes in relation to reporting, investment process, risk management, etc., including assignment of responsibilities among the involved persons, but also the process of internal reporting and escalation if there are breaches or issues. And also it is expected to inspect the evidence of meetings of the relevant governance bodies and committees as part of that assessment. And then another important procedure is the assessment of the design and existence of internal controls that have been specifically put in place by the institution to ensure compliance with the sustainability policy and investment objectives. So on one hand, the operational controls performed by the first line of defense, and then obviously also the oversight controls performed by the second line of defense, such as risk and compliance. So here the expectation that is that the controls will also be designed at that level. At the producer of a collective investment scheme, the expectation is that the auditor will assess that the producer has appropriate oversight controls in place performed by risk and compliance. And if obviously the asset manager is involved in the management of the products, which is not the producer, then also we expect that the asset manager procedure will be leveraged also at the producer. So in the case that producer also manages those assets, then we expect to have the same audit procedure as also for the asset managers. Yeah. In relation to the situation when some of the activities or tasks are delegated or sub-delegated, we have very similar procedures both for the asset managers and for producers. So here it's expected that the auditor will review the formal documentation of those delegated responsibilities and how they are overseen on a regular basis. by the asset manager or by the producer. And that can be performed by reviewing the respective contracts with the delegated entities. So now we come to a very important area, which is the sustainability policy, objectives and approaches. So at the asset manager, there is an expectation that there will be a formal sustainability policy, and that policy will be assessed by the auditor. And that assessment will need to include such elements as definition of the principles of sustainable investing, especially the sustainability goals and objectives that will be typically applied to the sustainable products. And then obviously the sustainability approaches that will be applied to achieve those sustainability objectives. And the policies also needs to provide explanations if there are any deviations from those approaches. So here I'm referring to the appendix in the self-regulation that provides the list of those sustainability approaches. So if there are any definitions, deviations from the definitions, then those deviations will need to be assessed by the auditor as well. And obviously also how those sustainability approaches are effectively implemented. And that sustainability policy will obviously need to be transposed into the asset management agreement that the asset manager will have in place, for example, with the producer. But also in case this is a pension fund mandate, then also with the pension fund client. And another procedure here is therefore a review of the asset management agreement that it has defined those specific principles there as well. Again, the sustainable goals and approaches, including explanations of any deviations, the fixed minimum proportion of investment that must meet the sustainability requirements. So here I'm also referring to that 70% threshold, which is has been introduced into the self-regulation. And also the relevant sustainability metrics, KPIs, and the methodology of the calculation. And we also make here specific remarks that this procedure can also be leveraged with the respective procedure at the product level. Guillaume, maybe if you could still go back for a second. Yeah. So at the producer level, the equivalent procedure has been defined at the product level. And I will come to that when I discuss the procedures at the product level as well. So now next slide, please. In the area of data and tools, and here we are talking about using sustainability-specific data, research, ratings, but also specific analysis tools, and which also covers proxy voting services, by the way. If those data and tools are used from third-party providers, then obviously the auditor will need to assess at the asset manager that there has been a due diligence process in relation to the initial selection and instruction of those third-party providers, and that there is also the ongoing monitoring process of those third-party providers. So obviously that due diligence process, in order to provide the auditor with the evidence of that, there needs to be a documentation in place. So the expectation is that the results of the due diligence, like the due diligence questionnaires, the assessments will be documented internally and will be provided to the auditor. And also the monitoring will also needs to be specified in the internal policy or in internal procedure. Then there is also a formal inspection check that those third-party providers are described in the asset management agreement of the asset manager. And here we are talking only about commercial or professional third-party providers, not about data sources that are publicly available on the internet. So those needs to be described in the asset management agreement. And also another check here is the assessment that the respective data, which is relevant to the sustainability investment process, also documented in the internal policies and procedures, either by the asset manager or by the producer. So at the producer level, in relation to the data and tools, in the situation that the producer doesn't manage the collective asset by themselves, so is not the asset manager as well, there is expectation that then it will be assigned to the asset manager, this kind of responsibility. If this has not been assigned, then the producer obviously will need to make sure that the asset manager has performed those tasks. So then that means that this procedure will also be performed at the producer level as well. And for the producers, there is also another small additional procedure at the product level that I will also elaborate on when I talk about the products. And this is what is happening now. So we are moving now to the level of the products. So here we have also designed specific procedures. And it starts obviously with the core area for every sustainable product, which is the sustainability characteristics and their documentation. Here the procedures are kind of similar between asset managers and producers. So the auditor will need to assess that specific parameters have been established for the products classified as sustainable, such as the explicit pursuit of sustainable investment objectives by either alignment or contribution to sustainability goals, as this self-regulation provides for. And we know this has to be for at least 70% of the product's assets. And those sustainability goals will need to be defined in accordance with a specific framework. And then obviously they will also need to be the sustainability approaches specified how to achieve those goals, and also the related KPIs and metrics that need to be specified in the asset management agreement in the case of asset managers. And in the case of the producers, they will need to be specified in the governing documents of the product, such as, for example, fund prospectus or any other document which is related. So if you compare those procedures, they are quite similar here. So for the producers, there is also a requirement, if you look at the last bullet point here, for the governing documents of the product, the auditor will need also to assess, besides the definition of sustainable goals and approaches and the proportion of investments, also if there is a stewardship approach employed, that those elements will need to be also described in the documents. For index funds, the relevant index parameters, because as you all know, if there is a replication of a sustainability index, there is still an obligation to ensure that the composition of that index complies with the requirements of the self-regulation, and also the relevant sustainability metrics and methodology will need to be assessed. Here is also important that the auditor makes these checks on the basis of the documentation provided. So it's the review of the respective policies, internal documents, but also the governing documents of the products. Obviously, if the auditor finds out that some of those areas are not adequately described in those documents, we can reasonably expect that the auditor will also perform some additional procedures, for example, to check the effective implementation of some specific parameters in those products. It will depend, obviously, on the risk that has been identified by the auditor from reviewing those documents. So what I want to say is that at the product level, there could be some additional tasting and work involved on the audit side. So let's move on to the next page. At the product level, there is also the area of advertising. So if both asset managers or producers prepare advertisements of products classified as sustainable, then the auditor will need to assess that the advertising does not contradict the information provided in the relevant legal documents, such as prospectus or fund regulation or any other documents. So here the procedure is similar both for asset managers and producers. Another large area at the product level is reporting on sustainable investment parameters. And here the procedures are also quite similar between the asset managers and producers. So first of all, the auditor will need to test that the required periodic sustainability reporting is indeed prepared and issued at least on an annual basis, either by the asset manager or by a third party or by the producer. And then another test is that the reporting includes specific disclosures specified by the self-regulation, such as the investment goals and sustainability approaches employed, the presentation of the related key metrics, KPIs, ratings, not only for the product, but also for the benchmark of the product. So there should be a comparison against the benchmark. So that will also be subject to the inspection by the auditor. Also, if there is a stewardship approach used, the relevant details on that. For strategies that use impact investing, additional KPIs measuring the progress of achieving the sustainability impact targets. For real estate funds, as you know, there is a separate set of environmental indicators that is part of the specific self-regulation for the immobilier, for the real estate funds. So that has been also transposed now into this self-regulation. So that will also need to be presented in the reporting and will need to be reviewed by the auditor. And also in the situation that the reporting is provided not by the asset manager or not by the producer, but by a third party, then the auditor will also need to ensure that there is an appropriate disclosure that indicates to the investors where that report can be obtained and how it can be obtained. Here, a very important note is that this testing is merely to ensure that those disclosures and presentation elements are included in the reporting. The auditor is not expected to test the accuracy of calculations of any specific metrics or indicators, because we believe that would actually go beyond the scope of this audit. Obviously, if the organizations want to have additional comfort on the calculations of those metrics and on the accuracy of those metrics, they can appoint the auditor to perform that additional testing as a separate assurance engagement. And yeah, we know that in the practice that is quite frequently done on some specific calculation metrics, for example, on the carbon emission metrics that are disclosed for the relevant products. So, and the next page on the products, there is another area which deals with the data. So we've discussed already the procedure at the asset managers that was defined at the institution level. For the producers, there is another small procedure here that requires the auditor to check that the sources of the data, if the data is taken from professional third-party providers, is also disclosed in the fund's governing documents, for example, in the prospectus. So it's a mere check of the related disclosure. So, and now I also want to spend some words on the exemptions, because as you know, the self-regulation provides for options in specific cases to claim exemptions from some specific provisions. One important exemption is when specific product or specific collective assets managed by the institution comply with an equivalent foreign regulation. So if that claim of compliance is made, then the auditor obviously needs to inspect the evidence that this claim is duly supported. For example, if there is a claim that specific products are compliant with the EU SFDR regulation, then the auditor will need to be provided with the appropriate evidence that indeed those products are SFDR compliant. And then another option that the self-regulation provides for is that asset manager can also agree either with the pension fund clients for the pension fund sustainable portfolios, or also with the producers that are not affiliated with the self-regulation, for example, with the foreign management companies, so foreign producers. They can agree on exemptions from specific individual provisions of the self-regulation. So if those exemptions have been agreed upon with those client organizations, then the auditor will also need to inspect evidence of those agreements. So either specific contracts or agreements in written form, but it could also be an email correspondence between, for example, the pension fund client and the asset manager. So here there is a flexibility to provide about the form how this evidence can be provided. So those were the procedures in a nutshell. You will also see in the guidance in the audit program that there is also a reference to specific articles of the self-regulation, which is very helpful. So it's not only the area, the procedure, but there is also a clear reference which article of the self-regulation that procedure covers. And the end product of the audit is obviously the assurance report. So as I mentioned in the beginning, this is going to be an IC 3000 limited assurance report. And the requirement is that there is only one single report covering both the institution level and product level in the same report. The reporting elements that we typically expect to be in place is obviously, first of all, the assurance report by the auditor prepared in accordance with the IC 3000 standards. Then as an appendix to that assurance report, there will be the management statement issued by the institution that will summarize the relevant assertions with respect to compliance with the self-regulation. And in the upcoming FAQs, the working group of the AMAS and ExpertSuisse will provide an illustrative example of such a management statement. But yeah, the management statement will need to be designed by the organization, by the institution, in collaboration with the auditor in the end. And then there will be an appendix which will list all sustainable products covered by the assurance report at the product level. So those will be the collective funds or pension fund mandates in the scope of the audit. And here you also see the illustrative examples of the wordings of the opinion or conclusion that will be expressed in the assurance report. So at the institution level, there will be a kind of a negative assurance confirmation, which corresponds to the limited assurance that based on the procedures performed and evidence obtained and assertions provided by the management, nothing has come to the attention of the auditor that would cause the auditor to believe that the entity has not complied in all material respects with the relevant provisions of the AMAS self-regulation in the specific period under examination. At the product level, there will be a second conclusion, which will be worded in a similar way, against that based on the procedures performed, evidence obtained, assertions provided by the management, nothing has come to auditor's attention that would cause the auditor to believe that in all material respects, the product's investment strategy and objectives, their description in the product's governing documents, and the product's periodic reporting have not been designed and implemented in compliance with the AMAS self-regulation in that specific period under examination. So those are illustrative wordings. We expect the audit companies to have their policies and approaches in place how to issue the assurance reports under the IC 3000 standard. There will obviously be further or can be further explanatory elements in those reports, but in general, you can expect to have this kind of conclusion in the assurance report. We might also think about potentially issuing an illustrative assurance report if we see a demand for that. But yeah, at the moment, we believe that the audit profession Switzerland is well capable to produce those reports. So now the last slide on the outlook. As you've probably seen, the audit program has been published on the AMAS website just a couple of hours ago, and it includes both English, German, and French versions. And there will be some dedicated audit Q&As that I already mentioned that will be issued going forward to address various practical matters and interpretations. So the work of the working group has not ended here. It will still be ongoing, and we'll be providing the relevant interpretations to the industry on that. So I hope it was not too much of technical stuff and you're not overwhelmed and still can still bear with us.
Thanks a lot, Dimitri. Very interesting deep dive in this brand new audit program, and obviously the perfect transition to the Q&A. So as you probably know, we tend not to take Q&As during the sessions because it's neither the AMAS nor ExpertSuisse, and obviously not Dimitri or Guillaume that answer the questions. But as Dimitri mentioned, it's our joint working group. Actually, we met this very morning, and so as Dimitri mentioned, we will update the Q&A in July. But maybe we can already give to the members participating today a flavor of what's coming. So, Dimitri, can you tell us more about the period of the initial audit?
Yes, as I mentioned, the period starts in April 2026. The initial audit can vary between 6 to 15 months in order to align that audit period to any other regulatory or reporting periods that the organization has in place. For example, if there is a regular reporting period as of the end of December, then the first initial audit can be from April to December 2026. But again, it cannot be longer than 15 months. We expect that, 15 months is long enough for the organizations to prepare and then also to issue the audit report.
Thank you very much. We'll also provide examples in the Q&A so that it's clear for everyone. About timing, what are the deadlines for completion of the audit and the issuance of the assurance report?
Yeah, so here this is still a little bit under discussion, but we believe that a good practice would be actually to complete this audit and issue the report within 6 months after the period end. But we also would like to provide flexibility to organizations on that, and would likely propose that it can be up to 12 months after the period end. That would still be acceptable to issue the audit report.
Excellent. Thank you very much. I think you touched upon that before, but so you confirm you will provide an example of a management statement in the Q&A, right?
Yes, there will be an illustrative example of a management statement. There is nothing overly complicated. It will basically be stating the obvious, that the institution complies with the self-regulation, both at the institution and product level. Potentially, there could be some additional matters included there. For example, if there are exemptions claimed for specific assets because they are compliant with equivalent foreign regulations, that would probably also be mentioned in that management statement as one of the assertions. And again, it will be designed between the organization and the auditor. But we will provide an illustrative example, and yeah, it will be helpful.
Excellent. Thank you very much. We also received already a question about white labeling situations. Can you tell us who is subject to the audit and who is the addressee in a white labeling situation?
Yeah, so that was a very interesting question. So if you have a situation that the producer of the collective assets, so for example, the management company and the asset manager are not the same, do not belong to the same group or to the same entity. So they are totally independent third parties. And but they are responsible for the same product. So the manco is responsible for the product, and the asset manager manages that product, right? So it's the same sustainable product that kind of triggers the compliance with self-regulation for the both entities. Who will be the subject to the audit? So we believe that the ultimate responsible for compliance is the management company as the producer, and the management company will be the counterparty in the audit and will be also the recipient of the assurance report. Obviously, if the management company or the producer delegates tasks and responsibilities to the third-party asset manager, the auditor will have to perform audit procedures at the asset manager as well. But the baseline scenario, at the minimum, the audit report will be issued to the management company. And also, in our view, it's totally fine if there is a second assurance report issued to the asset manager. If the asset manager also wishes to have this assurance report, that can also be commissioned and issued as well. And yes, we will provide also more explanations to that in the upcoming Q&As. Also in relation to various constellations that can be expected when you, for example, have a foreign management company, foreign asset manager, or foreign sustainable collective fund. So there are various constellations, and you're also familiar with those. There is already an FAQ issued by the AMAS that kind of explains of those constellations and which entity is subject to self-regulation. So we will design similar Q&A from that angle to explain what are the audit consequences from those various constellations as well. So this is upcoming and is still being in the making.
Excellent. So more on that maybe in August or September, if I'm not mistaken. Excellent. Thank you very much, Dimitri. I see a terrible typo and I'm responsible. It won't be in the slide deck that you will receive after the webinar. Can you tell us who are the intended users of the assurance report?
Yes, so in the assurance engagement situation, there are always three parties involved, and this is mandated by the assurance standards. So there is the auditor, obviously, the practitioner who audits the subject matter. Then there is a party responsible for the preparation of the subject matter. So that would be, in this case, the institution. And then there is always the third party, which is the intended user of the assurance report. So obviously the institution themselves are also the users of the assurance report because the assurance report is issued to the institution. But the presumption is that there is always another third party that ultimately benefits from that independent assurance. And we believe that those intended users of the assurance report in relation to the self-regulation are actually the investors in the collective sustainable products that are subject to the audit at the product level. Because the existence of those sustainable collective assets actually triggers compliance with the self-regulation also at the institution level. So we believe the intended users should be the investors. And the question that is currently being discussed is in which form the report can be provided to those investors. Because obviously there is an option just to publish the assurance report on the website together with the fund prospectus, together with the fact sheets, etc., which makes this report public, which may have some problematic consequences here, especially if the assurance report also covers, for example, mandates of pension funds, which are not just public collective investment funds. Plus, there are also some other unintended consequences because of this public distribution from the audit risk management side. So therefore, we're also discussing a second option that the assurance report may be provided to the intended users on a restricted way by means of specific requests. For example, the institution can mention on the website that the audit of the compliance with the self-regulation has been conducted and completed. There is an assurance report available, and that assurance report can be received by the specific investor upon request from a specific contact. But again, this is still under discussion in the working group, and yes, more coming on that going forward.
Excellent. Thanks a lot, Dimitri. So moving on to the next steps regarding the self-regulation. So as mentioned last week, self-regulation 2.1 was published. We published today the audit programs, as Dimitri mentioned also. The member education will go on, obviously, with AMAS events, webinars, and the Q&A updates. We'll also publish an AMAS position paper on sustainability later that summer or next fall. Coming up, clarification regarding the ESG integration and exclusion, model text Bausteine for real estate funds and for securities funds, and obviously the self-regulation will also have to adapt to international developments, for instance, to SFDR. The last news before we leave you in peace is the Expert Committee Sustainability, which will be launched next week and which will be our new overarching Expert Committee that will decide on matters that need to be clarified, such as the ESG integration exclusion issue I just touched upon. Here you see the logos of the participants, and we're very happy to launch this new Expert Committee. a last page on sustainability newsletter. As you know, we have been publishing this newsletter since last December. It's once per month newsletter. We're trying to cover Switzerland, EU, and international developments. So if you're interested, just shoot Aurelia or myself a couple of lines, and we'll add you to the distribution lists. And that brings me to the next slide, which is our next webinar, which is going to be implementing the self-regulation, early insights and case studies. A member agreed to share its concerns and how they tackled the problems arising when implementing the self-regulation. So stay tuned and register for this webinar with the QR code. And on that note, thank you everyone for your time. Thanks a lot, Dimitri, for all your help, and thanks for being here today. I think it was really helpful to discover the audit program in your company. So thanks a lot.
Thank you very much.
Have a good afternoon, and see you soon. Bye-bye.